Yeah. So I thought it would be really interesting if when we decide to do the Tesla DD, if we just take some key ratios in mind. So this is sort of my favorite one now, where I take the cost of revenues and then I go to the statement of cash flows and I see CapEx. And if CapEx go up, then I know the company is growing profitably. Now Tesla's been opening factories, so we know that that's the case. Another thing that I also like to see too is I like to see cash from operations, which let me pull open my calculator, my calculator here. This is going to be this one. And then I like to divide cash from operations by revenues, but it has to be, yeah. So I like to divide them by revenues here. So yeah, this equals 91% cash to revenue conversion, which I like that. And then let's also go to summary, and I want to see what the all right, so we got a $6.16 earnings. That means the entire business going forward will make $6.16. And then the forward PE is $158.93. So we know that it'll be really cheap going into the future. So
Also, I have a question. Why are you looking up how to make money online?
don't question. You just don't have the mindset then, man.
And
you know, it all starts with the capital mindset, you know.
Did you learn in your search to see how to know stocks will go up? Did you learn something about that you're going to tell us about Tesla?
Yeah. So I learned here that based on volume, all this means is the amount of stocks that are going to go up. So 26 million stocks are going to go up because Tesla is going to go up. So then if we go to financials and we go to the statement of cash. Welcome back, guys. Welcome back to the Capital Mindset Show. We hope that you guys enjoyed all of those jokes and laughs at the very beginning. I was just showing my knowledge I've accrued over this past year, investing my first year. But without further ado, today we're actually going to be seriously taking a look at Tesla, ticker symbol TSLA. We're going to be kind of seeing what the business does, who runs the business. I think we all know who runs the business. But anyways, who runs the business, what the business looks like in terms of the financial position. And then also we're going to be kind of offering our own thoughts. So without further ado, what are we looking at here today?
All right. So first, I guess we'll ask, Austin, do you have an experience driving a Tesla, riding in a Tesla? And if so, how and why?
I have experience riding in a Tesla. For the most part, it's a pretty good experience. I like the big dashboard at the front, but there is definitely.
Which model did you ride in?
I couldn't even tell you.
All right. So there's Model Y, Model S, Model X, and Model 3.
I think I rode in the Model S. I think it was the Model S. Although there is definitely a weird smell in the Tesla.
That's in the Model 3.
In the Model 3. Okay, so then I rode in the Model 3. Shows you really how much I know about this. But that's why I'm here asking the questions. So
he's referring to there's this paste that they use in in one of the AC units inside of the Tesla that decays over time, and then it gives off that smell and actually has to be replaced. It's a defect with that car.
Isn't it animal hide glue? That sounds like animal hide glue.
Yep, exactly that.
Okay.
So depending on where you live in the States, that's going to be more of a problem or less of a problem. But we're not a gearhead video. So you said Tesla, we know who runs it, Elon Musk, obviously. He makes the headlines all the time. He just made a headline with Elizabeth Warren. That was the most recent one. And with Elon Musk, no doubt he is very influential. And so we're looking at one of his businesses in which one of the most influential people of our time is the CEO, and not technically the main founder of the Tesla name. He bought that. But he is the one who built Tesla to what it is today. And let me just say, we're going to do kind of a more in-depth analysis on the model and the business model of Tesla than what I think other creators provide, because there's a lot of things I think Tesla is bringing to the table. that other car companies are going to copy or take influence from. So Tesla is definitely in the innovator category. However, I'll just come out and say the sentiment that Tesla will simply dominate with no competition, I don't necessarily follow that camp. So I just want to be clear. And I'm not biased. I am a Tesla customer, but and the car is enjoyable. However, that doesn't mean necessarily that I'm going to just be jaded by that and then dismiss all other offerings by other companies. And then I do, for example, like what Toyota's coming out with in their Lexus and Toyota lineup. And I may one day be a customer again of Lexus. And I know Thaisa, she loves Lexus, so she wants me to.
Aren't there
go
multiple
Lexus.
different initiatives now by several other car manufacturers to do exactly that,
Yes,
to get into
we-
the electric auto
we have a close friend.
Yeah.
We have a close friend, you know who I'm talking about, who
Yep.
is a gearhead, and he says the electric Porsche is the best car he's ever driven in his life. The mileage, you might say, as a point of criticism. I always point that out because for me that's important, the mileage. But
Yeah.
a lot of people don't care about that. And the build quality is pretty good, not pretty good, very good. And some things in Tesla, the build quality can be questionable at times, and I will be the first to admit that. But I say that they're the growing pains of a growing car company. However, all that being said, everything I say that's positive doesn't actually necessarily equate to a good stock price. So we have to separate the stock price from the business.
Yeah, and also I kind of want to touch on that now because we're seeing a lot of investor sentiment sort of drive, at least in my opinion, it's driving a lot of the price of Tesla upwards. And I've also been kind of reading some of the
It's
people
going
that
down
are
right now, so I don't know what you're talking about.
Yeah. But I've also been reading people online that have been saying, oh, Tesla's going to be opening new factories. They have expanded into China, all of these various reasons to remain bullish on the stock. But here at Capital Mindset, we like to kind of take an objective, unbiased approach, or as unbiased as we can be, approach to looking at these particular stocks. So what are some of your opinions right now on the bullish arguments in favor of Tesla moving into 2022 and beyond?
Well, the bullish arguments for Tesla is typically surrounded on the fact that, or not the fact, the presumption that it's not a car company, but instead a technology company. Now, I understand if you have or hold those viewpoints. However, if we look at the what makes up the revenue at Tesla, the majority or the grand majority. I'm sorry if you can hear that. It's actually my cat. He's down here below me.
Oh, I cannot hear the cat.
Don't
so
worry.
do not
Okay,
worry.
so then I will continue. We'll
Yeah.
leave that in. But the difference is that the grand majority of sales done by Tesla is the cars and not these other different parts of the business that will hopefully come over time. But a lot of people are counting that before it's here. So therefore, it may already be priced in, right? The stock market is a future pricing mechanism. So if something is somewhat obvious, it will be priced into the stock. What we look for is things that are not so obvious. And we have to remember that the mechanism of how stocks go up and down is driven by buying and selling. So we have to understand that so that we can recognize when things are separate from reality / fundamentals, right? If we understand that the mechanism of how stocks move up and down, right, then we can therefore say, okay, well, that's going up based on fundamentals, or it's going up based upon sentiment, right? And then the sentiment of Tesla has far exceeded its actual performance. Okay, there's no way around that because if we take a look at the current valuation at close to $1 trillion, it doesn't generate enough sales to even justify the current valuation. And it'd be very difficult for you to argue that, because typically how you know this is everyone is arguing future potential to justify the current valuation. Now, future potential, you can do that. However, you have to acknowledge when it is you're reaching or when it is you're making a fair assumption that you have a margin of safety, and you may not have a margin of safety here. Okay,
so if I'm kind of understanding what you're saying here is a lot of the people that are bullish about Tesla in this instance are alluding to future events that are happening to justify their current investments now, rather than
Yeah,
the actual
correct.
performance of Tesla now. So now my question is, someone who might be all
Well,
for Tesla might,
I want to,
yeah,
okay,
hold on,
maybe
hold on. Yeah, yeah.
yeah.
Someone who might be all for Tesla would say something. Isn't that exactly what investing is? You're making predictions about the future performance of various businesses, of industries, et cetera, and so forth. While yes, it is important to see the health of the business now, usually when you invest, and I'm speaking from the perspective of someone who might be bullish on Tesla that might have a critique for the argument, usually when you decide to invest, you're keeping in mind what that company could do in the future, what the future returns of that company could be. So
Yeah. I mean, my own cousin called me asking if he should invest in Tesla now. Well, we'll discuss. This video will hopefully help them
mhm.
or give them some insight. But yes, investing is about figuring out what the future potential of a business is and kind of mapping that out, penciling in what you think is the potential, and then figuring out is the current value fair for that future potential. However, you have to be honest with yourself, as I've said many times in our video series, that if you're not honest with yourself, the only one you're hurting is
Yourself. Yeah.
yourself, right? So if you are trying to justify your decision with what we can maybe consider to be a form of information bias, so you're just taking in only the facts that suit your current beliefs, then the only one you're going to hurt at the end of the day is yourself. So you have to be fair and honest. Are your predictions about Tesla reasonable? Define reasonable. What happens if you're wrong, right? Because no one asks that. A lot of people forget to ask that, at least. What happens if I'm wrong? What happens if what I think will happen doesn't happen? Am I going to still come out on top, or am I going to crash and burn? Remember, rule number 1, don't lose no money. Rule number 2 is don't forget rule number 1. What does that mean? What does that statement mean? Well, it means that the priority should be preservation of capital. Then following that should be growing your capital. And remember what Anthony Dean says. It's very easy to make money. It's very hard to keep it, right? And a lot of wealthy people, they figure that out. And especially people who are newly wealthy will figure that out very hard.
Yeah.
So Tesla, while it can be a fantastic company, the fundamentals have not grown in proportion to the stock price. And we have to, again, go back. The mechanism of how stocks go up and down is buying and selling volume, right? A lot of people can just simply buy into a stock. We can drive the price up technically for infinity, right? And then we can operate under greater fool theory, right? I can sell it to someone for a higher price. Fair, okay. But you cannot argue that it's fundamentally driven. And if you argue for the future fundamentals, are you arguing with a margin of safety? Probably not, probably yes. Now, let's be a little
Let
bit
me
positive on Tesla. All right.
Yeah,
Continue.
and let me actually ask this question first, because you brought up an interesting point that your cousin actually called you asking if he should invest in Tesla, and now this is sort of a commentary that I want to make now. It almost kind of seems like a lot of what is driving this price upwards is the fact that, just in essence, the stock go up right now.
Mhm.
And now I kind of want to offer a commentary here about how we always hear a common investing mantra: you want to be fearful when others are greedy, and you want to be greedy when others are fearful. Now, sometimes this theory might not be hold scrutiny. Like, sometimes if you see a difference in the business fundamentals of a business, you want to be legitimately fearful. There should be no reason for greed. However, in this instance, are we kind of seeing here a situation where we're seeing a lot of people be greedy with Tesla? I'm not saying your cousin's greedy. I'm just saying this is just a lot of the psychology behind
Well,
the way people
I'll
like
answer.
to
I'll, yeah.
invest.
So answering your question, but kind of taking it in a different direction, it actually has to do with human psychology. And the human brain is not very good at perceiving something known as exponential patterns,
Mhm.
right? So exponential patterns is something the human brain seemingly is it's very difficult. And this is actually what I was discussing with him today. So for example, let's say a stock price is $100. It goes down 50%. And now the stock price is $50. Someone might say 50% down. That's cheap now. It's gone 50% down. You may out there watching this know what I'm about to say, and you're like, oh, I wouldn't think that. But a lot of people can sometimes think, oh, that 50% drop, I can't go any lower. What your brain is really kind of not recognizing is, or what it's doing, it's operating in arithmetics, right? So it's 50% down. There's only 50% left to go, right? 50% risk is off, right? However, if you bought it again at 50, it can go down to 25, right? And then now you've lost 50% again, right? And then not from the original 100, but from the $50. And then now another person comes up and says the same thing. It's down 50% from the 50, right? And they think the same thing again. Then you go from 25 down to 12.5, right? And then we can do the same thing again, 12.5 back to 6.25, right? And on and on and on and on. So the exponential patterns is something that humans sometimes have a hard time distinguishing or rationalizing, and in both directions, by the way. So that's why sometimes compounding interest seems so fascinating, because our brains go, whoa, because our brains typically operate in the arithmetic sequences of life. You know,
Yeah. So
each dollar I get is $1. And then when things compound like that, it's sometimes difficult. That's why humans like to use calculators. And that's why it's so impactful when you use a calculator, because the calculator is doing the visualization for you. And then sometimes your brain, it's difficult for your brain to do it without the calculator. Just by thinking about it, it's quite difficult. But
so now my question is, what this sounds like to me, at least, is this is almost just by the nature of human psychology itself, thinking in a box of sorts. What are some strategies you would offer to have others sort of recognize that this nature, because I know this nature is innate in me, it's probably innate in most of our viewers out there. What are some strategies that you would recommend? Just be comfortable with the fluidity of the way these sorts of
no, it's
things
simply
work?
it's simply recognizing that just because something goes down doesn't mean it's cheap.
Yeah.
That's
Okay.
the end lesson of that. Just because it
Okay.
goes down doesn't mean it's cheap. Don't allow your brain to just take over, your lizard brain to take over, and then just think it's cheap, right? I'm saying
Yeah.
lizard brain because it's, kind of like
No, it's funny. It's funny.
instinctual, right?
Yeah.
So we have to use our intelligence to then recognize, okay, what's going on, take the emotions out, and then use tools, right? That's what calculators are at the end of the day. They're tools. So compound interest calculator is the tool that I just described that allows a human to fully visualize the not geometric, but exponential patterns. And then that's why it looks so fascinating. Have you ever felt that? You go on a compound interest calculator and then you play around with the numbers and then you get a little bit like excited. Well, that's because
Yeah.
your brain can't typically visualize it on its own, right? That's why you get the excitement. It's like, it's a surprise. It's a sense of surprise. And that joy you get can be learned. Okay. So you can learn to say, or to stop yourself from just acting or thinking quick, right? You can say, okay, it went down 50%. That doesn't mean it's cheap. You stop yourself. That's a learned ability, right? It's fairly easy to learn, but it's something that new investors need to learn more. Okay. They're the ones who usually fall prey to this. If Tesla goes down 50%, a lot of people, I watch this, a lot of people who are fairly new, and new can be 1 year to 2 years, is still a new investor. They're going to, sometimes in their brain, they're going to think, oh, it's cheap now. No, that doesn't mean that. All right. Anyways.
Yeah.
So,
Kind of focusing back to Tesla here now.
yes.
Can we kind of plug Tesla into our model and just sort of
Well,
ascertain if
I wanted to go over some positive things because it seems like I'm being a little bit negative on
yes.
Tesla. Because I mentioned in the beginning some things that they've contributed that I think going forward, a lot of car companies are going to copy. And that's a direct to consumer model. So I'll kind of echo a discussion I had with a close friend of mine who is fairly enthusiastic about the motor vehicle market. And he loves to invest. He is invested. He's the one I told you that I told him about Porsche a while back, and then he bought Porsche as a proxy to Volkswagen. And he's done fairly well, but he loves investing in vehicles, even in collectibles of cars. All right. So what I was discussing with him is the Tesla has definitely changed the way that people think it is possible to buy a car. I love the way Tesla has changed that because I hate the dealership. I'll just be honest. I don't know if anyone watching works or owns a dealership. I may not be talking about you per se specifically, but just keep in mind, I'm painting with a broad brushstroke here. So dealerships in the United States have a bad reputation for screwing the customer, right? They tend to have that bad reputation. And it's not the fault. Sometimes it's not the fault of the manufacturer because they can't necessarily directly control every single aspect or experience of the customer. And the car companies have tried in the past to cut the dealerships out because it allows them to go more direct to consumer and allows them to control the customer experience. However, dealerships have utilized the power of the government to basically maintain themselves alive. And they're, in my opinion, an unnecessary middleman that can cause more problems than help. And Tesla is trying to, again, circumvent this through the online sales market where they deliver the car to you. I think the rest of the car companies are going to do the same thing. So Tesla has contributed this positive development. And the one thing that Tesla needs to figure out, and I'll be honest, is the repairs. So when a Tesla needs a repair, right now it's not as efficient, but there are a bunch of new complications. For example, self-driving. This is a part of the discussion I had. If you get your car repaired somewhere, you need some sort of authentication to make sure that the self-driving is fully working, because Tesla may be liable if the repair wasn't done right. And then, you did something wrong and the self-driving just plows into a school bus, for example. So there's a lot of complications that you add onto the value chain for car companies. And also with this is the new added complexity of how you have a bunch of mechanics, right, who know how to repair ICE vehicles, but now you're doing electric vehicles. Will you have the same infrastructure to do that? And will Tesla allow or open it up more? I think they should, but these are all the things that they're all going to kind of deal with together. And I think over time, they're going to get there. But Tesla is bringing on all of these new adjustments to the industry that I think is positive. That being said, long-winded answer. I didn't even get into more nitty-gritty details, but let's get into the model. So the model.
Perfect.
Are you trying to say something, Austin? Huh?
Yes. I was going to tell you your opinion is stupid and worthless. Tesla to the moon.
Stupid and worthless. To the moon. All right, so let's do a 10% required rate of return. And I forgot to even put in the ticker. All right, remember, here on Capital Mindset, we do what the analysts say. They have a buy rating at a price that's lower than it is today.
Yes. The analysts are infallible.
The analysts are infallible and they do not make mistakes. All right, so basically at current valuations, if the cash flows do not grow from here, it is a buy at $27 if you want a 10% rate of return. Okay. Obviously, people out there are thinking it's going to grow. Okay.
Yes.
Fair. Let's put the middle assumption and it averages out over the past couple years. Okay. And let me actually see real quick. What did it? Yeah. So growth is decelerating.
Interesting.
Yeah. Well, that's normal. As they get bigger, it gets harder. They're getting more and more market share. So you know what? Let's say that they can grow at
8. Let's take the middle value. So like 18%, something like that as well, for maybe the first box up there for growth rates. I just want to see what it'll look like.
No, 18%. Wow. They'll never grow at 8%. It's minimum 50%. I don't care what you say. I'm kidding. I'm joking. But let's do 30 for argument's sake. Whatever.
Still not 18.
Not 40. Let's do 35. And then let's do, I don't know, not 50, probably 60. Yeah, there we go. Look at that. All right, I'm going to buy. But, okay, so we haven't accounted for dilution. So I still think, I rip on this so much, but I think I should just do it every time. When a company doesn't need to dilute, it won't dilute.
Yes.
I love that statement.
The only infallible analyst himself. I love that.
Like when that person said that, that was just so funny. I'll just never forget that. Such a stupid statement. All right. Anyway, I rarely use that word. I don't like to use that word too much, but that's a stupid statement. All right. So negative 3%. So share dilution of 3% going forward to pay for, stock-based compensation to all the nice employees. And let me just tell you right now, looking at this, management should be diluting the absolute living daylights out of you. They
Yeah.
should be doing it all day, every day right now, raising capital, make this company unkillable and the undisputed leader for here on out, right? If they dilute the living daylights out of you, I will start to get, I'll be like, huh, right? If the price comes back down, I'll think this company has a very bright future. They'll have cash for days. Anyways, not the point of this video. So taking a look here, their return on invested capital is not that good, but I'll tell you right now, they're a car company. They're not a tech company. So that those numbers are not that out of the ordinary. Return on assets, 6%. Again, it's a car company. So those numbers are not that bad. So on a PE basis, they are 259 ish. And then I guess the forward PE is about 100 something. So maybe, you know what, Austin? I think we will give the people what they want. We'll say they'll grow at 100% every year for 10 years. There you go.
That's
Tesla will 10x if it can grow its cash flows at 100%. No, it won't 10x. It will not 10x. What am I saying? Well, actually, let's actually see that. I think 10x is 27% return. Oh no, almost 27.5. 27.5. Maybe it's 27.25. All right. So right here, if they grow at 100% per year for 10 years with a dilution of negative 3%, you in fact will or can 10x your return. Right. There you go. That's what the people wanted. A $10 trillion market cap. I can't even imagine what the cash flows are implying. At 100% growth for 10 whole
yeah.
years. That'd be pretty crazy. All right. Anyway, back to
So what about the criticism that people would obviously have? You kind of touched on this at the beginning of this video as well, that Tesla is indeed a technology company. They're coming out with the cell phone. What are some of your opinions regarding that?
Well, we will have to see. Most of it's vaporware for now. We have to see when it finally comes out. This is interesting, but it depends on what you believe the growth rates are. If you think that they are going to in fact grow 75% every year, remember, that can be a little crazy. It's a buy at $648, and that's a nice discount rate. But will it grow at 75? I don't know. See, like this is what they've averaged out because growth is decelerating, and I'm not diluting as much as in the past. But even let's take that out, because some people might say we're being too critical. Yeah, even if I take out the dilution, it's not good. And by the way, if they're buying back shares, that's criminal. They would be destroying cash. I'd rather than be investing it in the business, even though the return on invested capital is terrible for a company in general. For a car company, that's pretty good. The likelihood of bankruptcy is basically nothing. This one, you can trust the Altman Z-score a little bit more because it's more of in the industrial category because it's automobiles. So here you can say they're not going to go bankrupt anytime soon. Okay, so there's no risk of bankruptcy in the near future. However, of course, obviously that can change. So don't watch this video 10 years from now and Tesla's gone and then be like, he said it wouldn't do it. I'm saying for the near future, there's no risk. And then again, we're looking at these growth rates. I don't see that they're going to be able to match this. However, it does say, okay, if you think they're going to grow at 48%, not too long ago, the price was around there. Let's take a look again to remind ourselves how this price has moved. Fantastic performance. Remember, stock can go up as long as people buy. And right over here, if you were a buyer back when it was, considered hated, you could have made somewhat decent assumptions about the future and considered it to be an okay proposition. It was actually feasible, right? It was within the realm of possibility, right? I believe that someone could, at the time, think of Tesla as growing at around 30% per year, right? That's within the realm of possibility. That would more likely be my higher end, with like about 48% might have been like my highest point, and then I would have weighted it less. But even here, by the way, let's probably take away. Yeah, we already took away the dilution. I think what would be the price that we're pricing in right now? Let me see the growth rate. What do you think it is, Austin?
90 something. Oh,
80?
actually,
No.
way
So
way less.
remember,
75,
it's the closer. No, we were at 75. So 76 and
77.
then 77. 77 is going to go above. So
So it's like
between 77.
76. Yeah,
So let's do
76.5, something like that.
76.5. We're basically there. So
Mhm.
76.5% is what we would have to assume for this growth going forward, assuming no dilution. I think as soon as we add some dilution in there. Yeah, you see, as soon as we add dilution, no, it goes away. But that would be for a 519% rate or 20% compounded rate of return. Okay. And that's pretty good, by the way. So nothing to sneeze at, but will this happen? I don't think so. Now going to the key ratios, let's take a look at that to see how healthy this company is. Beautiful, really good. Cash ratio, we don't need that to be 1 because that's the most conservative. But however, the current ratio is doing good. The long-term debt ratio, balance sheet's looking cleaner and cleaner and cleaner.
Yeah.
Gross margins are going up and up and up. Cool. ROE, ROA, good for a car company, not good for a company, but good for a car company, so therefore good. Earnings quality,
Wow.
fantastic in well, also fantastic here and fantastic here. Remember
Yeah,
what I said
because
about
those are
correlation?
those are the absolute
Whoa,
values there, right?
remember what I said about the correlation that we've been observing in my earnings quality calculation?
Typically businesses that have better earnings quality are the price typically tends to go up, correct? That's
There seems
that's
to
what
be a
you've been saying.
look at the change. Remember these years. Let's actually look at what the years were. So 2017 to 2018, the earnings quality improved dramatically.
Mm-hmm.
Okay.
Yep.
What do you
I'm
think
listening.
happened there? 2018. At the end of 2018, the earnings quality improved dramatically, according to the model. That's the grade. Remember, it's not causation, everyone. It's correlation. Correlation does not prove causation. I'm just observing this. It's kind of more recent that I've been like looking back and saying, oh, that calculation's been pretty interesting. All right. So at the end of 2018, let's see where the end of 2018 is. Yeah, December, because that will take the December number. So around there. The earnings quality was fantastic, and it remained fantastic up until today. And it peaked out in 2020, and then it came back down to normal levels. Remember,
Okay.
by the way, if you're
So
watching at home, take the way you read this is you take the absolute value, which means if it's negative, turn it positive. And if it's larger than 1, it's good. If it's less than 1, it's bad. Okay. So this negative, change it to a positive 2.15. And then that is more than 1. And then here it was terrible. So in 2017, the score that was returning back was terrible. The score in 2018 was very good. And then it got better in 2019, and it peaked out in 2020, and then it's getting worse in 2021, but still
so
very good.
now what I'm extrapolating from here is that we saw a notable improvement in the performance of the business relative to earnings
Not the
quality between
business.
17 and 18.
It's not the business
In the
performance.
price performance, we
Nope.
saw no.
Oh, well, we saw price performance, but no, the earnings quality does not measure the performance of the business. Nope. It's a scorecard on the accounting of the management team.
Okay.
So
then what meaning are you extrapolating from this then? Is that like how what could be is it just simply that it's just a scorecard based on the accounting of the management and then
well, it's more complicated than that, but yeah, that's what it's returning to me. Then that's how I look at it. So the way you're supposed to read it is a score above 1 is good, a score below 1 is bad, and it's just taking into account how the management is reporting the numbers, and
okay.
it returns a score. And typically, when management is doing a good job at returning that, I've been noticing that there is a correlation, not causation, because there will be instances where that they don't match, because there's so much that attributes to a business's or stock's performance than just that. And it's not even, I don't even think it's not the cause. It's definitely not the cause. There's something else that goes on that it's kind of correlating with. Everyone knows what correlation means, right? You want me to explain correlation?
You might as well. I mean, I
So
assume everybody does, but you might as well just for the sake of what you're trying to illustrate here.
So correlation is when you can observe two distinct factors that kind of show up together. Okay.
Mhm.
So for example, you don't want to assume that correlation is causation because, for example, you can say that temperatures in the oceans rise and then also piracy rises. Right. That's usually in the textbooks how they explain correlation does not mean causation. So higher temperatures does not cause increased rates of piracy.
Yeah.
That makes sense.
It's just
But they can be correlated.
Yeah.
And there may
Okay.
be factors between each variable that are kind of related, and maybe something's causing it. All right. But it never proves causation. Causation is a very specific thing. And then correlation is an observation of two things happening at the same time. So what I've been seeing more lately in this year is that score tends to have been correlating with good performance of the stock. Tends to.
Okay.
There
Okay.
will be obviously instances where they deviate, so it is not something that should be used as like
Yeah,
a direct indicator.
it's not causation. So you wouldn't want the audience to see higher earnings quality and then be like, boom, higher earnings
No.
quality, therefore
See,
increased
it's
performance.
one
Instead,
of the
yeah,
many. Mhm.
yeah, you're basically saying, okay, I'm seeing a higher amount, I'm seeing improving earnings quality. Then I typically tend to see a correlation between the price performance of the stock. However, this does not mean that this is the cause of this. This is just a correlation I'm noticing here. Sort of like,
Exactly.
okay,
Exactly.
yeah.
So it's just exactly. It's one of the many things I look at, and it's a
Mhm.
good. I like to see high earnings quality, and if I see improving earnings quality, and then everything else is lining up, I would be interested in. And remember, so far in the model, it does say, kind of going back, that the 30% growth rate in that realm, it was feasible. I believe it's feasible. And I think there was a good risk reward because I think you, even assuming dilution, I think you would even discount it at 15%, which is slightly less, slightly less, a large margin of safety. And you see, we're still within the realm, and it was like below. Again, considering that it has grown since then, what we can do is kind of redact the numbers a little bit, but it would be more or less in that range. So let's go back to the key ratios and finish this off. But everything looks good here. Cash conversion cycle, fantastic. Wow, very good. Improvement there.
Yeah,
Anything
that's a
else?
very, very significant improvement there.
This is getting worse because they're probably doing
Actually,
more
just to
credit
kind
longer
of touch
term.
on this, we've covered this in other videos. However, would you kind of briefly go
But it's
over what
improving.
the cash conversion cycle is and then how this is also sort of correlated to what Tesla's doing?
All right. So not to make this video any much more longer, but basically it's like a measure you can use to see the power of the business in order to get the cash for each sale, right? They sell something, but they don't necessarily get the cash coming in. So if the cash conversion cycle is kind of like a smell test, when we did a video a while back, when we compared a bunch of food companies, it
Pepsi.
again correlates with the bigger the company, the more powerful it is, you might think, the better the cash conversion cycle. That tends to be the case. So like Pepsi had the best cash conversion cycle of all of the food companies, and it literally went in line with which ones were the largest, right? So it correlated with that because they potentially have greater negotiating power with whoever they're distributing it to. All right. So
Mm-hmm.
negative cash conversion cycle is very good. Okay. And then it's getting lower. So again, we have these things on this column over here that's supposed to help everyone out to kind of get an idea of what this is. These are ratios. We don't at this, well, some of these are classic ratios. All of these, anyone can do. Do not be a ratio whore. That's what I highly advise do not do. Right, Austin?
Yeah. Basically means don't use every single ratio in existence, even because, just don't do
Yeah. And
it.
know when to use one and when not to use one, but don't die in the
Yeah.
trenches. You're just going
Yes.
to be paralyzed. It's analysis paralysis, some people might call it. All right. But anyway, a lot of rambling in this video, but I hope you guys took some value from it. And Austin, would you buy Tesla at current prices?
No,
Why not?
no.
I thought you were the bull. What's this?
I know. I'm sorry. I have to betray Kathy Wood in this. I know, but I would not buy Tesla at current prices. I would have bought Tesla, hindsight being 2020. I would have bought it in like the $40 range, but now,
Well, I mean, it was in the
probably not.
range of feasibility in terms of performance, but however, you probably wouldn't have held because it would have exited the realm of feasibility rather quickly. Because again, it went under the we have to go back to our basics of stock investing.
Yeah.
The mechanics of the market can drive stocks beyond what is reasonable, and it can do so for a very long time, but it can do so in both directions. It can drive things unreasonably cheap or unreasonably expensive.
Mhm. Yeah. Well, what about you? Would you buy this stock at current price levels as well?
I'd rather stick to the cars for now. And with the actual company, no. Should I
So
talk?
you were betraying Kathy Wood as well.
I mean, I do have
Yes.
a position. Should we talk about that or leave that for another?
Let's leave that out for another video.
Well, you know what? The people who've been sticking around to the end, maybe we should let them know. Right?
If you're hesitant, let's leave it out for another video.
What video would it be in then?
The next video. The next
video,
video.
just a random video that's just like
The
we're
next
talking about
video.
the next
video
of Tesla.
We talk about it in the very next video that comes out.
Just randomly, just like, hey,
Randomly,
that video about
randomly.
Tesla.
Yep, exactly. In the next video. Yeah. Well,
right.
We hope that you guys have enjoyed what you have seen here today. If you have, please be sure to like, comment, and subscribe, and visit our website at capitalmindset.org. We are your hosts, Austin and Fabio, and we'll take care, guys.
I have a single